Hello, everyone, and welcome back to the SkyBridge Bitcoin Review Show. My name is John Darsie. I'm a Director of Business Development here at SkyBridge. We're joined today not by our usual guests, Anthony Scaramucci and Brett Messing of SkyBridge, but by an outsider by the name of William Clemente III. And if you don't know Will, you should get to know him. If you're on Twitter, you should follow his Twitter account there. And if you don't subscribe to the Pomp newsletter, you should subscribe to it, because every Friday, Will offers a tremendous on-chain analysis of everything that's happening in Bitcoin during that week. Just a reminder, if this is your first time on the show, we like these to be very interactive, especially now that we have a great special guest here today. Submit your questions through the Q&A box at the bottom of your video screen on Zoom. We'll try to get to every question that we can, but this is going to be a little bit different than our normal show where we go through sort of all the news in Bitcoin. We're going to focus more on the on-chain analysis and stuff that Will has been observing over the course of the last week and beyond. But before we dive into questions, I'm going to allow Will to introduce himself a little bit. He might be young, but he is prodigious. So us young fellows are holding down the fort today.
Hey, how's it going, John? Thanks for having me on. My name is William Clemente. I'm a upcoming junior at East Carolina University here in North Carolina. Over the last year, partially probably because I've been stuck in the house, I've really gone down the rabbit hole with this Bitcoin stuff, kind of gravitating towards, the data. And, Bitcoin's very unique because, we have this on-chain analysis where we can kind of analyze the behavior of the investors on the blockchain, which is, unlike anything in traditional finance, at least from my understanding. So you can get a lot of unique insights that you wouldn't be able to get in other markets.
Yeah, absolutely. And Anthony Pompliano, like you and me, I'm from North Carolina as well, Will. So go Pirates, and you have a Durhamite here. But before we bore everybody with that stuff, let's dive into this week. So the big thing we talked about in this week's SkyBridge Bitcoin newsletter, for those of you that subscribe to it, and if you don't receive it, email us at bitcoinir@skybridge.com. We'll make sure to share it starting next week. But is the decline in hash rate on the Bitcoin network. So historically, there's been a correlation between the price of Bitcoin and hash rate. There's no real strong data that indicates causation. Does price lead hash rate, or does hash rate lead price? But there's also insights that we can glean from the chain and your type of on-chain analysis. I know you talked about it a little bit in Friday's newsletter that you wrote for Pomp. So what are you seeing based on your on-chain analysis of what is the impact of this decline in hash rate that's largely emanating from the exodus of Bitcoin mining from China?
Yeah, so this has been on everybody's minds in the Bitcoin community, especially over the last 2-3 weeks. We've had the largest drop in hash in over a year. We have this difficulty adjustment coming up here in a few days, but yeah, as of right now, blocks, rather than they're usually pumped out every about 10 minutes. It's now up near, I believe, 25 minutes that every block is getting pumped out. But once we have that difficulty adjustment, then that'll go back to that 10-minute period. And the miners that are in North America will be a lot more profitable. But yeah, for now, we're just, we have to put up with the slower blocks. But the Bitcoin network continues to, pump out new blocks, although it is slow, and continues to move on regardless of hash rate migrating out of China. In regard to kind of the relationship between hash and price, I think this is something that has been debated often. Does hash lead price, or does price lead hash rate? And I think where a lot of this comes from is the fact that when hash goes down, ideally, it means that a lot of miners are, coming off the network, and therefore they're probably liquidating their assets, which include Bitcoin. So, from my understanding, that's that big kind of correlation there. But what I've been seeing, and it's interesting, I haven't seen a lot of selling from miners, at least in the data that I'm looking at. I use Glassnode, and I also use CryptoQuant. Those are two of the big data providers. There's also Coinmetrics, which I know is another really popular one from Nick Carter. But in the data from Glassnode, the miners have sold just over 5,000 BTC. I think they're up to like 5,200 that they've sold since they kind of dropped off the last 2-3 weeks. But nothing substantial, that would move the market in a big way. So I find that interesting. Either Glassnode's data, they're missing something there, or maybe they're able to liquidate. Maybe they're liquidating the miners themselves, the hardware, or they're liquidating something else. Because at least in the data I'm looking at, once again, it doesn't look like they're liquidating that Bitcoin.
Right, and hash rate from its peak to trough had a drawdown of something like 70%, but has since bounced into the 80s as of a couple days ago. What evidence are you seeing of mining equipment that's migrating out of China starting to take hold in other locales? Is there evidence of that on the blockchain of these mining rigs getting back online?
Yeah, so Glassnode, I think they try to not go in the gray area between like privacy and just like doing raw data analytics. So I think by like looking at starting to add in the location of wallets and things like that, I think it kind of hops in that gray area. So I personally am not able to view anything about the location necessarily, although that would be super interesting. But I have seen a slight recovery in hash rate, but nothing substantial yet. It still seems like it's in a downtrend.
Right.
But I think over the next month, I would suspect that you'll probably start to see that trend upwards again.
So shifting gears a little bit, one of the things you wrote about on Friday, and that I think has been interesting to monitor over the course of the last year and a half as Bitcoin has enjoyed this large rally, is long-term holders versus short-term holders buying Bitcoin, and the way you're able to observe that on the chain, especially in the recent drawdown. You've seen, I believe, based on reading your work, long-term holders are the ones that are continuing to accumulate Bitcoin. They are strong hands. They have high conviction. You're seeing short-term holders, people that more recently, joined the network, are the ones that are more likely to capitulate. Are you continuing to see that? Could you describe that phenomenon, more eloquently than I did, and what you've been observing on the blockchain?
Yeah, absolutely. So, as you said, a lot of the selling, especially over, call it the last 2 months, has all come from very young coins. So the way that you can identify the age of the coins is through something in on-chain terms is called coin days destroyed. So, if a coin is in a wallet for 1 day, it accumulates 1 coin day. And once that coin is then moved out of that wallet, then it's considered 1 coin day destroyed. So that's one metric that you can look at on chain to see, the size of, how great is the rate of, coin days being destroyed, over time, over, weeks or months. And then also dormancy, which adjusts coin days destroyed for volume, which is something I prefer to look at. And both of those metrics have been trending down over the last, 2 months. And then also just what you had talked about, the short long-term holder thing. So the way Glassnode distinguishes the two is they use a threshold. It's 155 days, which is also 5 months. And so, they've written a paper about backing up why they use that. But it's because once they cross that threshold, statistically, the likelihood of them selling drops off dramatically. So that's why they have decided to use that number, that 155 days. But, when you look, historically, in the bull market, you see, the longer term holders begin to scale out as prices increase because they accumulated really heavily in the bear market. Because these are people that have been in the asset for a long time, understands, the cyclical behavior of it, right? And then at the same time, you see short-term holders continually increasing their holdings throughout the whole bull market, the bull run. And of course, that's, new speculators, drawing in either to capture, hop on the momentum trade, or just retail, FOMOing in because they think this thing's going to the moon,
Right.
And so you have that dynamic, but then when we go back into the bear, you start to see long-term holders buy again, while short-term holders scale out. So you can look at this dynamic 2 ways that we've been seeing, because over the last 2 months, you've seen the long-term holders have actually started buying, and then the short-term holders have once again, scaled out. So yes, that resembles what we've seen in the end of a bull market and leading into a bear market. But it also resembles what we've seen kind of in mid-cycle. So there's been 4 occurrences of what we're seeing right now, where long-term holders have, began to buy heavily while short-term holders have scaled out. Once again, at the end of the 2013 and 2017 bull runs, but also in the middle of those. So, if you look at the price chart, you look at 2013, we had what I like to call like the two double pumps. You had almost these two bubbles, and then in between there was this like 5 or 6 month long consolidation phase. And so during that time, it was actually long-term holders that had, really set the floor there, while the speculators, scaled out. And then once you had that second big bubble and run up into that second bubble, then you saw them scale out once again. And then as well, you saw this dynamic again in late, I guess you could call it late 2016, kind of early 2017, in that previous bull run that we had before this one. You once again saw during a substantial correction, you saw long-term holders come in and set the floor. So, there's been 4 occurrences. 2 have been bullish, 2 have been bearish. So you kind of make of that what you will. But when I look at some of these other kind of broader metrics that aren't necessarily in on-chain terms in bear market territory, that's why I see it as kind of a mid-cycle consolidation. And then also, not only is it long-term holders buying, but it's also wallets that have very low spending behavior. So they take a lot of coins in, but I think Glassnode uses like a 25% threshold, I believe, to consider an entity a liquid. And an entity is like a group of wallets that Glassnode kind of forensically, they use heuristics to say, okay, this looks like one entity on the blockchain, whether it's a person, corporate treasury, anything like that. And so they analyze the selling behavior of that entity. And once again, I think it's below 25% spending behavior. And so they say, okay, that looks like, in a liquid entity. And so they're able to kind of look at that change between liquid and illiquid. And when we had that big drawdown, you saw a lot of supply move from what was, liquid and moved from being a liquid into what's considered then liquid. And so that was kind of a telltale sign that we were moving into this drawdown, and then also seeing a lot of coins moving onto exchanges. But since then, and over the last month, this trend has just continually moved, into what looks like accumulation, where now supply has increasingly moved back into entities that are liquid. So, entities that have low spending behavior. And you've also no longer seen that big increase in coins moving onto exchanges, which ideally means, of course, there's some of it is, market makers moving in and out, people posting Bitcoins for collateral. But in a general sense, coins moving onto exchanges is people moving them on to sell, people moving the coins off exchanges. It is people, putting them into some kind of custodial service to hold those coins, like, SkyBridge uses Fidelity, for example. And so that had been a big trend that you'd seen throughout the whole bull run. Both coins moving off exchanges and coins moving to those liquid entities. That had stopped when we had that correction, but now that's starting to begin again, where you're seeing, coins moving to the liquid entities, and then also it's not necessarily trending down, but it's kind of sideways. The trend of balance of Bitcoins on exchanges. So both of those things kind of resemble reaccumulation, as well as stable coins. So stable coins had all kind of moved off onto the sidelines when we had that big correction. Perhaps people, kind of saying, okay, it looks a little frothy. I don't know if we're going to have a lot more downside here. We'll just kind of wait it out to get confirmation of, momentum of price action, whatever it may be. But we're actually now starting to see those stable coins move back onto exchanges into the market. So that's another kind of positive sign that's showing, we're kind of moving out of this reaccumulation phase, perhaps kind of in the latter half of it.
Yeah, so the implications of stablecoins moving back from the sidelines, which you wrote about on Friday, is sort of the opposite of Bitcoins coming onto exchanges for liquidation purposes. It's stablecoins moving onto exchanges, people looking to get long more Bitcoin.
Yeah, exactly. That's the kind of thinking process there. Especially over the last week, we've seen a lot of stablecoins, Tether and USDC, start to rotate back onto exchanges.
Yeah, and then you also dabble a little bit in technical analysis. Although technical analysis isn't foolproof by any means, but as one tool in your toolkit can be valuable. When you look at the combination of on-chain metrics, some of the phenomenon that you just described, as well as sort of the technicals of the chart, it feels like we've held pretty firmly in the low 30s, mid 30s, while some of these positive signs of accumulation are taking place. how would you factor what you've viewed from a technical perspective into the on-chain analysis picture?
Yeah, absolutely. So, obviously we're in this range between 30, 40K, kind of just like a crab market here. And we retested kind of that mid-range today around, 36.5 and kind of got rejected off of that. We'll see what happens. But, it's been interesting. We just kind of been chopping in between that. And then, like you said, also on chain, it's showing accumulation. But, it's interesting. You can actually use now on chain and then kind of cross that over with technical analysis. And this is something that I've started to dabble in because it's actually just been introduced to Glassnode, where you can now kind of add technical indicators onto on-chain metrics. So one kind of variation I did with this was looking at OTC outflows. So, coins moving out of OTC desks, which of course is, ideally resembling buying from high net worths or, institutionals or family offices, whatever it may be. But this isn't retail going through OTC. So, just kind of first principles, I was like, the money you want to follow is the big money. So how can you look at that? And that's the OTC outflows. But when you look at that chart, it's kind of just up and down, very noisy. And so what I did was apply an RSI to that. And so you get these very distinct kind of buy and sell signals based on the strength of those OTC outflows. And that's actually moved into, according to, the way I structured the indicator, a buy signal in this last week. I think it flashed a buy signal around 31,500. So that's one interesting thing kind of the crossover of those two. In terms of just purely TA, I think obviously that 40K, 42K level is very crucial. That's also, kind of around where the 200-day moving average is, which I know is like a very important moving average for determining, a bullish trend for any kind of asset in traditional finance.
Yeah, and sorry for that interruption there. That was an emergency alert in New York City. It's so hot today. They're urging households and businesses to conserve energy because the energy grid is being strained by, I guess everybody has their AC on here in New York. I don't know. Are you down in Greenville right now? I don't know what it's like in North Carolina.
I'm actually home from school, but yeah, it's pretty warm. I went to the pool today, but yeah, it's pretty warm.
Living your best life. So one of the things you talked about is the lack of new whales coming onto the network. So existing wallets that have been deemed to be illiquid holders of Bitcoin and accumulators of Bitcoin are the ones that are buying, but we have a dearth of new whales coming on to the blockchain. You see one of the pieces of news this week that we wrote about in the newsletter is Citigroup became the first big bank to form officially a digital assets group. They plan to do more in the space, but we've seen obstacles, whether it be regulatory uncertainty or, FUD around the energy and ESG piece or, China's regulation of Bitcoin prevent maybe further institutionalization of the asset class. Both in terms of analyzing news as well as looking from the blockchain. What does that pace of new whales coming on the chain look like, and what are indications that it might ramp up in the future?
Yeah, so this is interesting, and I think it's something that's crucial for any kind of second leg back up in the bull run. So, on chain, you can look at obviously the size of the holdings of different entities. And so what we've seen over the last, 2 months is this decline in whales, which in terms of Glassnode's data is any entity with more than 1,000 BTC. And it's been interesting because, in the beginning of the bull run, especially after we broke all-time highs, you saw this huge swath of whales come on the blockchain, which perhaps maybe they were just, riding the momentum trend. And, obviously any asset breaking all-time highs is kind of a no-brainer trade. But, over the since late February, last 2 months, we've really seen this big downtrend in those whales. While retail has actually continued to be, buying more and more, which is kind of contrary to what a lot of people I've seen out there saying that, retail freaked out and sold it. That's actually not what I'm seeing. Retail's actually been buying stronger than ever. It's actually been whales, the larger entities that have kind of stalled out in terms of how much BTC they've been adding to their holdings and just the general number of whales on the blockchain. And so also you can look at like the new users. So once again, like Glassnode uses these heuristics to kind of identify what looks like a certain entity on the blockchain. And then they look at the difference between those new entities that are coming on and subtracts that from entities that look like they're dormant, aren't holding any BTC, aren't active at all. And so you get something called net entity growth. You could just think of it like net user growth on the blockchain. That's actually seen since the big capitulation we had, the original one down to 30K, over a month ago. We've actually had this big W-shaped recovery in that. And so I think part of that, once again, like if you could break this stuff down geographically, would be really interesting. Because in this case, I think a lot of that's coming from Latin America. But in just kind of from a high level, it's not whales, because you're seeing new entities come on the blockchain, but you're seeing new whales trend down while retail's holdings are going up. So just that's kind of my frame of thinking there. That there's new entities coming on, but it's still not anything that resembles like institutional buying per se.
Right. I want to go to an audience question about Tether. So there's this thesis that's existed, this piece of FUD, if you will, around Tether, that essentially Tether is creating new stable coins without backing from actual dollars. And that when that situation unravels with Tether, then it's going to be a huge piece of, it's going to trigger a short thesis on Bitcoin. It's going to drive it significantly lower. Is there anything in the on-chain analysis or things that you've studied that can either debunk the Tether FUD or potentially warrant the fact that people are worried about it?
Yeah, it's a great question. It's been something that's kind of been haunting Bitcoin for years, and I think it's a very valid criticism and something to be worried about as an investor. It's not something I'm personally able to really speak on and give you a quality answer kind of in depth, but I would recommend look at work that Caitlin Long has put out. She's working on Avanti Bake over there in Wyoming, but she's very knowledgeable about this stuff. I've read some of the kind of short, she puts out threads on Twitter, stuff like that. I think she's actually done some interviews speaking about this stuff, but I think she would be the person to kind of go to and look at the work that she's put out in terms of that. She's also been kind of she's put out a lot of criticism about how well backed Tether is, but in terms of like the on-chain, anything that I look at, I'm not able to really give you any good answer on that.
Right. Based on the on-chain data you look at, and this is another question from the chat, Anna is asking, you're likely familiar with Plan B's stock to flow model, which is sort of the gold standard so far in terms of people being able to predict on a long time horizon the trajectory of Bitcoin. Right now, we're bumping into the lower band of that stock to flow model. Is there anything that you see in the on-chain data to support that theory, or generally, how do you view it based on the way you analyze Bitcoin?
So in terms of stock to flow, I think it's a good meme, like for younger people. We all love memes, right? I think it's a good model for people first coming into the space to kind of grasp on the idea of scarcity and how that how can that kind of be visualized over time with the halving every 4 years. But I don't think in the short term that I would really give it any validity, to be honest. But we are seeing like the biggest deflection of stock to flow in terms of its history. I think there's been one larger deflection very early on to the upside, but in terms of to the downside, we've currently we're in the middle of the largest deflection from that stock to flow model price. But yeah, I think it's directionally correct. Maybe something you watch over several months, but it's not something that I per se like look at on a day-to-day basis or week-to-week basis.
Right. We have another question about the death cross. So a death cross is when the 50-day moving average crosses below the 200-day moving average. Was recently observed in Bitcoin. Again, going back to the technical analysis piece, is the death cross something that has any statistical validity in terms of portending lower prices, or how do you look at the death cross?
Yeah, I've seen a lot about a lot of that on Twitter. I think NYDIG was NYDIG. They put out kind of this table of kind of what had happened after each historical Bitcoin death cross, and on average, Bitcoin had gone down. I think it was 4% over the next 6 months. So I think there's been a couple instances where Bitcoin's had a big down draw, but then there's also been a few where it's just kind of not hasn't really mattered. So I don't know. I think it's interesting, but in terms of like it's kind of the price action historically afterwards, I don't really see any like real pattern there.
Right. So we have a question from Lauren in the chat, and it's about the GBTC discount. And I think this is something that has significant validity is when GBTC was trading at a very high premium late in 2020, early 2021, it was a massive hedge fund trade to buy GBTC. And then in 6 months, when the lockup ends, liquidated onto the over-the-counter market at the premium. So you're basically getting a free arbitrage trade. We looked at it, frankly, at SkyBridge, but it seemed like something that was almost too good to be true, that it wouldn't last. Thankfully, we didn't pull the trigger on that, and we were correct on that assumption. So now GBTC is trading at a significant discount, potentially crimping demand for those hedge fund type trades into Bitcoin via that vehicle. Have you observed any phenomenon related to GBTC and how it's affected on-chain data?
Yeah, so there's like a lot to unpack here. I think, first of all, recently we've seen, just like kind of in the very short term, you've kind of seen that premium come up a little bit. The discount come up a little bit. It was, I think, as low as like 25%. And then I think it hit as low as negative 4% in the last week. So that's been interesting to also see that, along with, Coinbase, their stock actually, get bid up a little bit while you're not seeing, institutional buying of Bitcoin itself. But in terms of, what on chain, I think Grayscale was one of the big drivers of this bull market, as many people probably know, and the arbitrage opportunity you just described. In addition to that, the cash and carry trade, going long spot, shorting the future, which isn't something anybody in the United States could do, but I think a lot of overseas hedge funds had been doing that as well, and that had also driven capital into spot. But in terms of Grayscale, I think that was very visible, looking at kind of the balance on Coinbase's, on their exchange and in their wallets. You had seen this huge kind of like drop off a cliff in the holdings from Coinbase, but that isn't as steep as it had been towards the beginning of the bull run. And a lot of that, I think, was Grayscale, because they've come out and said that they operate through Coinbase. So seeing that slowdown, I think, is can be kind of attributed partially to that slowdown in buying from Grayscale. I think looking at kind of the premium and the correlation between when the price kind of stalled out, I think you can kind of see a little bit of a correlation there as well. I think that Grayscale arbitrage, and then once again that the cash and carry trade, those two things were two huge drivers into the spot market, and part of the reason why we saw this huge move up and kind of this this move into like this market neutral position, whereas maybe it wasn't people with actual conviction in the asset, but right. Especially for the cash and carry trade overseas. I mean, that's kind of a no brainer. It's just buy spot, short the future, and just capture that free spread in between, which had got up to I think it was up near 50% on, it was like Deribit or Binance, one of the two at some point. So.
And if you're Sam Bankman-Fried, you pull money out of a bank in Japan, you fly it on a plane to the United States, and you do it manually that way. Fascinating guy. We're excited to have him at the SALT conference in September. But
Sam's a genius.
Yeah, he is a genius. He's operating on a different level than me and you. Let me tell you. But rewinding more to, we topped out obviously above 60,000. I guess that was a couple months ago now. Elon Musk, was pointed at as the catalyst for that drawdown. Obviously, there was some leverage in the system that was unwound during that period. What did you observe on chain during that pullback? And do you think right now we're just at a point where leverage has been shaken out of the system and we have, a core group of strong long-term holders from which we're going to form a base going higher? Or what do you think the path is? This is an additional question to higher prices. What do you think the catalyst is going to be for the next bull run?
Yeah, I think in terms of the leverage, a lot of that is wiped out, especially not when we had that first drawdown. It was interesting. A lot of leverage got wiped out, but it was actually the second drawdown that wiped out even more. And so, yeah, we've lost a lot of that, which once again kind of had been bidding up the futures premium and drawing in some spot interest to capture that trade, which was indirectly because of the leverage. But now that that's gone, that's gone as well. I think when you think of leverage, a lot of people are thinking about like the margin trading on these derivatives platforms, but I think there's a lot of there's also a lot of underlying leverage in BlockFi, for example, or people that aren't necessarily on margin on some of these exchanges, but have borrowed money to buy Bitcoin in other ways other than just like going margin long on Binance or something like, or FTX, for example. So I think there's some of that stuff that maybe I can't see on chain, but perhaps maybe like Barry Sober, some of these people that know kind of where the spots are, where kind of the leverage is hidden. But I can only really see the stuff on these derivatives platforms, but looking at that, a lot of that is wiped out. Yes.
Right. But before we let you go, Steven in the chat is asking for a prediction, the price of Bitcoin a year from now, based on your analysis. And we're going to put you on the spot and ask you where you think Bitcoin is 12 months from today.
Yeah, I think, in a year from now, I personally suspect that this bull run will be over, although I think we have a second leg of it personally. So I think it would be hard to say a year from now, but if I can kind of like cop out and maybe say at the end of this bull run, because I think it'll kind of end maybe towards, early next year. But I think we go to six figures. I think we go to maybe 150, 200K, at tops, maybe in like that last euphoric leg up. But I don't see us personally going to, 500K, a million, any of those kinds of prices. I think we do dip up into the six figure range. And I also missed the end of your last question. So I guess this kind of ties into this as well. I think, the second catalyst would need to be more institutional capital. The retail really can't sustain an asset of this size. So starting to see on-chain, an uptick in the new whales coming on the blockchain, I think is going to be very important to start to see, And I think
regulatory clarity is going to play a huge role in that. People like to point to an ESG angle, trying to solve some of the energy issues. They point to an ETF approval, which would obviously be a potential catalyst. So I think there's a lot of institutions that we talk to, being, pretty large institution ourselves, that are just waiting. They like the asset class. They like the story. They're just waiting for that approval process or just ratification process from the U.S. government that being involved in this space is going to get them in trouble. So, and we had another question in the chat earlier. Who is this brilliant young man? I missed the beginning of this talk. So this is William Clemente III. He's a rising junior at East Carolina University in the great state of North Carolina. He writes Anthony Pompliano's Friday newsletter for his Pomp newsletter. So if you don't subscribe to Pomp's newsletter, you should do that. You'll get a weekly letter from Will. Will, is there anywhere else they can find you? Tell us where they can follow you on Twitter and follow your work in addition.
Sure, thanks. So I'm on Twitter at WClemente, III. I'm just on there all day long, posting charts, looking what other people are posting. So, if you want to reach out, DM me or whatever, I'll be happy to just talk all things Bitcoin, whatever it may be. And then I also like John said, I do Anthony Pompliano's the Friday newsletter, but we're actually starting to transition over to my Substack, which is just a platform to do the newsletter through. But I think we're actually going to publish the Friday one on both. So I publish also some like midweek updates. So if you want some of that as well, then subscribe to mine. But if you just want the weekly overview, then you can.
And what's your Substack? What's your Substack URL?
It's BTC by WC3.substack.com. And then that's also in my Twitter bio.
All right, there you have it. Brilliant young man. Thank you so much for joining us, Will, on the SkyBridge Bitcoin Review. It's a pleasure to have you. Everybody go follow Will's Substack and definitely pay attention to what he has to say on Twitter. He posts a lot of great charts with great on-chain analysis. But thanks, everybody, for joining us again today. We'll see you back here next week at the same time.
Thanks for having me on, John. This was a blast.